All right, ladies and gentlemen, welcome back to another episode of the Market MadHouse Show. My name is Cyprian Francis, and with me, as always, co-founder, the big dog at the MadHouse Market, Mike Patton. Good morning, Mike.
Good morning, Sip, and good morning, everybody.
Today is July 13th, and the big news item of the day is this 9.1 year over year inflation. And
Crazy.
if we hit 10%, I can't, I don't know when the last time we had 10%. It's got to be like the 70s.
Yeah, I think it was the early 80s, I think was the last time we did. It was the very early 80s. And then the Fed just went on a tear with raising interest rates to crush it. And it caused a recession. Well, it helped to create a recession, then it recovered. But yeah, guys, this inflation is nuts. I mean, this is crazy. And I mean, I was just out with a friend. We were talking about this last night. I mean, no matter what you look at, everything costs so much more. And I don't have to tell everyone that. Everyone watching this, this is true. But when you think about it, it's insane that, for example, I can buy, let's say, chicken. I can buy basic chicken. I mean, very basic, nothing special chicken. It's going to cost me like what, $6 a pound. And there was a point where $6 a pound was like steak prices. That's where you got a decent steak from your supermarket for a while. $10 a pound would be like, man, you got the best thing ever. Now you're looking at like $25 a pound, $30 a pound. I mean, it is incredible. So, inflation, basically, those numbers coming out guarantee one thing, and that guarantees the Fed is almost certainly going to raise interest rates this month by another 75 basis points. I don't see that they have any choice. They keep pointing out things about the economy, saying like, "Oh, the economy is looking good and it's robust," and we don't think that this inflation hike is going to change anything. So they're basically preparing you what they're about to do. They're basically telling you in no uncertain terms, "Hey, we're going to raise rates." Now, of course, they could always surprise us, but I doubt they will. The numbers don't lie here. Inflation's up. It's not going away. And after what, almost 2 years of them telling us it was going to be transient, well, year and a half, it's going to be transient. It's not going to be a problem. I don't see any issue. Well, now it's too late. And now, the ship is sinking. You got to start doing something to save it. So I don't see that changing at all. Inflation is here to stay. And even if they raise, I don't think that's going to be enough. And also, we should keep in mind, guys, that Chairman Powell actually did say that there's not that much they can do. Biden basically has said, well, there's nothing we can do. So raising rates is kind of like the only option they have, and it will slow things down, that's for sure. But I doubt that it's going to completely quell inflation. So here we are.
Yeah, and I feel like maybe this number is a tad delayed, right? In that
Yeah.
we did raise, and maybe that has had some effect over the past, 2 weeks or so, but also oil has been coming down a bit, right? I
Yes.
think we had like 4 or 5 weeks, maybe like 4 weeks of oil dropping in price,
Yep.
which does help, but it's still significantly higher. And so
Right.
is oil playing a factor? Because I know that China's starting to get involved. What's going on in that respect?
Well, oil is always a factor. We can't possibly ignore the impact of energy's prices, but we should think of this in context. While oil prices are down from where they were, they're still high. I mean, we're still looking at oil in the 90s dollars per barrel. Like today, we're at about 94. It got down under 94 for a little bit today. Part of the reason for that is oil inventories had a surprise build. They were reported today. I think it was 3.3 million barrels. That's for the United States. So basically, demand for oil apparently is not as strong as for fuel as we expected. But that doesn't change much because when we think about it, the biggest reason why oil prices are slumping is because of China. China is constantly battling COVID. They're trying to stamp it out. And every time they do that, they have to shut down part of their economy. So when they lock people down, just like when we did it here, it slows things down, right? So you have less consumption, less manufacturing. It's exacerbating supply chain issues, which of course helps increase inflation because you have fewer products available and you still have demand. So basically, the Fed honestly, they seem to be trying to eliminate the demand side by forcing more people out of work. And they're right. If more people become unemployed, then you'll have less demand because there'll be less money for them to spend. But until that happens, we'll see. And so for oil, even though oil prices are down, I really don't think they're down enough. If oil prices went down to 60, 70, okay, then we should see some serious changes in our fuel prices, etc. But a lot of the problems we're facing are not just from the price of oil; it's also supply chain related, as I mentioned. So, it's the ability to produce fuels. I haven't really checked if labor is affecting this. Maybe we don't have as many people working. So there's other questions I have, but I know for sure in the transportation sector, we know that a lot of truckers have stopped trucking. They just said, "I don't want to do this anymore," and most fuel is delivered by truck. So when you go to the gas stations, et cetera. So I believe that's got to be a factor in fuel prices being so high. Yeah. So guys, everyone. As far as that goes, oil is going to constantly be an issue. It's down somewhat now, but even when you think about it, if China having these constant battles with COVID can't even get oil below $80, then as soon as things calm down, prices go right back up. So I do think that this year, I still believe that we're going to average over $100 a barrel for 2022, and I do think that going forwards, we're going to look back and see these prices as normal. So, so we'll see.
Yeah, so I just pulled up on the chart the economic calendar, and I kind of have a question here for you, Mike. And looking
Go
at the
ahead.
CPI year over year at 9.1%. So how far up do we need to raise interest rates to start to contain that, right? Because isn't the issue
Yeah.
that we can overrate, raise the rates too quick, too fast to
Yeah.
really hamper the economy? So a 1% every meeting still won't even get us close to trying to tamper this inflation here.
Well, probably not. So, and that's another thing we should consider. I have to. What is the benchmark rate right now? I actually don't know that off the top of my head. Let me
I think
see.
it's
U.S. benchmark.
1.75 maybe.
I think it's higher than that. No, you're right. 1.75 exactly. Yeah. Okay. So let's just think about this. 1.75%. Okay. If someone tells you, "Here, open this savings account and you're going to get 1.75% interest per year." It's good. It's good from what we were getting, like two or for a decade, we were getting basically no interest. But historically, no one would jump out of their seat to get a 1.75%, interest. So interest rates are still remarkably low. Even with these hikes, interest rates are low. So when I think about it, like it will slow down the economy, but for us to, we would have to raise rates in my guesstimate. And like I said, this is too complex of an issue to try to guess because even the Fed struggles with this one. So if they're struggling, I don't think I have a chance. But I will say this: um, my guess is that interest rates, practically speaking, would have to be 7%, 8%, 9% to really, really make a sharp change across the economy. Now, we don't need it to be that high to have a change in like the stock market. We don't need it to change that much to have impacts on, some sorts of, like loan lending and things like that. Just having interest rates where they are now is slowing down the housing market because everyone's used to these really, really low rates. Maybe credit card expenditures, but everyone's paying a higher interest rate anyway, even with low interest rates from the Fed. I don't know any people that have like a 1.75% interest rate on their credit card or a 3% interest. The reality is banks always charge you a lot more no matter what. So, in short, I think we would never be able to raise them enough in the short term to have that dramatic of an impact, but it will impact us where it's really going to hurt, and that's in the financial sector. And unfortunately, the financial sector, even though we have all sorts of stuff going on outside of it, when the financial sector suffers, everybody suffers. And that's what we have to be afraid of because if the cost of carrying debt increases by interest rates going up, that's going to spill over across the board, and I don't see any way around it. So where we are right now is already high enough, and it's going to go higher. So we are going to see some spillover impact from that, and it will slow down the economy. But ultimately, to really get rid of inflation itself, I don't think they can raise rates high enough to do that. I believe that's going to be more of a matter of supply chains becoming more normal and geopolitical tensions going away, et cetera. And more importantly, we have to improve our infrastructure, not just here, but across the globe, because a lot of the problems we're facing isn't because we don't have enough oil or we don't have the capacity. It's just that we have a lot of infrastructure problems that are causing prices to be higher. So unless we fix those, interest rates alone can't fix the problem, but they will slow down the economy for sure. And if they really go high, they'll crush the economy. So I think they got a way to go, a ways to go before they can really crush the economy. But the financial sector, though, I will emphasize that's going to have problems, and any debt, and of course, there's tons of it out there. That's the spillover effect where debt burdens become too high, and then that squeezes money out of the marketplace, and then things come down. So that's what we can expect. Every time they raise rates, that's going to push the market farther down.
Yeah, and the big question, I guess, today was, is it going to be 75 or 100 basis points? And I think you're right. I think it'll be 75, which will get us up to that 2.5. The market is off a little bit off of that
Hmm.
CPI number.
Yep.
But looking ahead through the rest of the week, we've got the PPI and we've got retail sales that might help shed some light on this information, but that
Right.
seems to be the driver of the week.
Yeah.
So let's
Well, keep in mind if retail sales, in my opinion, would be. I mean, PPI, et cetera. We've seen CPI, so we can pretty much know what to expect for PPI. Um, but what's going to be more important, in my opinion, is retail sales. If retail sales keep slumping, then that's really a bad sign. Because a lot of people right now, I mean, obviously our company, we hire people, and right now it's a lot easier to get people to respond to a classified ad than it was maybe a year ago. And basically, with the job market, it was hot for a while. Everybody had it. Every company was looking for workers, and no one, everyone's employed. But if consumer spending in the retail sector keeps slumping, that's number one, an indication of how much of people's income is being drawn out into other expenses, like, due to inflation. And then we also have to factor in that means that a lot of these jobs that people are working they might start to lay people off. And the more people get laid off, we got more unemployment, which honestly the Fed wants. I mean, they clearly want more unemployment. So does the government, so that we can quell the demand side. But um, obviously, when people are unemployed and out of work, yeah, maybe it solves the inflation problem eventually. But now you got people that need a job. So now you got another problem. So, I mean, right now, this is going to be tough. The reality is that we just have to get on better economic footing. So, if retail sales come out okay, then that's a good sign. I would actually consider it a very good sign. But if they don't, then probably we'll see more downward pressure on the markets. And also, the Fed will now have more things that they have to address as well.
Yeah, so we'll keep an eye on that. Retail sales this Friday should move the market.
Hmm.
Moving on, one of the things that I also saw in the news was this the currencies, right? Like we're
Hmm.
starting to get parity in the euro and the US dollar.
Right.
And the stock that we're going to be covering here is one of the airline stocks. And does that benefit a company like Boeing?
Parity in currency does typically benefit because you don't have to worry as much about the difference in exchange rates when you're, buying or selling products. So in theory, yes. In practice, a company can also offset their currency risk through the forex market, foreign exchange market. They can basically hedge their purchases. So I wouldn't say it can definitely affect the demand picture, right? So if buyers have stronger currency, then of course they can buy more of your product. So that's true. So I would say on the demand side, yes. A good, but parity basically equalizes it. So it just comes down to who's got money and who doesn't at that point if your currencies are equally valued. But on that note, um, that's a big deal that the euro is achieving parity with the U.S. dollar. That's not a good sign for Europe because it basically says that the value of their economy is shrinking. Um, and that's true, it is. So that's a bad sign. I also notice, I think the ruble and the US dollar are getting close to parity. I might be wrong on that. I'll have to check, but I'm not sure. I guess it can't technically be parity, but I think it's getting closer to where,
Stronger.
yes, it's definitely getting stronger. But so yeah, I mean the currency stuff, I don't know, but when it comes to Boeing, which is the stock you're mentioning here, Boeing. For those of you who don't know who they are, let me pull it up on this chart here. So Boeing
Who doesn't
is,
know what Boeing is?
of course, everybody knows who Boeing is,
They
right?
make
Right. They make
airplanes.
airplanes, yes. So Boeing makes airplanes, and they make your jumbo jets, etc. Probably the most famous airline, plane builder in the world. Let's just put it that way. Everyone knows Boeing 747s and stuff like that back in the day. All right, so Boeing stock has been, let's just say, it's not done so well since the pandemic starts. So if you look here on my screen, you can see this big drop here was the, as I call it, the pandemic sell off. Then we had a rebound, things kind of came back, and then they started to slump again. So now we're getting close to the lows that we saw before. But we had some good news yesterday. Yesterday it came out, I'm just reading my notes here, that Boeing had delivered 121 jets in the second quarter of this year. They delivered 95 in the first quarter. So the market seems to have liked that, and they basically moved the stock up about 8%. I think they said 8%. It couldn't have been 8%. It was something, it can't be 8%. It must be less than that. But anyway, the stock may have been up 8%. I'm not sure. I have to look at my notes, but it was up a lot. All right. So today it's down 2.49%,
It
slumping with
might
the
have been
rest of the
up
market.
8%. I'm looking at the dailies, and that bar is like 4 times bigger than the daily.
Yeah, yeah. So I'm thinking, I was like, man, was it really up that much? Yeah, I guess it was. Yeah, I guess it was up 8%. So obviously a pretty big move. But now, a lot of people ask about that. I'll do that in the analysis. But a lot of people asked me about this yesterday. What do I think is going to happen next with it? And I guess maybe we can go over that here.
Yeah, why not?
So
Well,
Boeing,
well, before we do that, the
yeah.
like to anybody watching for the first time, right? The first thing you're going to draw your eyes to are those four little analysis bars, right? To the top left. So we got a green, a yellow, and a yellow. And so that's a good setup. So Mike, what does all of that mean?
Well, it's a okay setup. I want to call it a good one, but you're
Okay.
so we have green for technical on the chart. Okay, so green means that on the chart is trending well. If you're looking at the chart, you might be saying, "Well, no, it's not. It's been going down." But this green here doesn't look at the long term. It only looks at the short term. It looks at the last 20 days, basically, and this is what the last 20 days look like. It's definitely up, right? So Boeing going up. That's what gave it the green score. But the yellow basically means, folks, that the stock is neither hot nor cold. It's just lukewarm. So they have lukewarm bottom. The bottom box is fundamentals, lukewarm numbers as far as their business, their income, their revenue. Lukewarm in terms of valuation. Valuation just means how much the stock is worth in comparison to what the company is able to generate as far as profits, revenue, things like that. So investors always compare these numbers to make a judgment call of whether or not the price of a stock makes sense for the amount of money, the amount of profits, whatever the company's generating. And that's also mid levels, not hot, not cold. We have institutional activity, the circle, which is showing that big buyers and big sellers, they're fairly evenly matched. So no net difference in buying or selling activity that we can see. So in short, Boeing is on cruise control essentially for the bottom three. But for the chart, it's actually on a trend. So we can exploit this. But this brings up the analysis. So looking at Boeing, I'm going to go to let me just go to a 3 month view. So here's Boeing on a 3 month chart. And as you can see, it is starting to go up over here. It's been going up since there, but it is starting to look like it's trending up. I do think this has potential for a trend to the upside going forwards, but it's all going to come down to fundamentals. And if the fundamentals are not improving, then it's not likely the stock's going to trend up at all.
Well, the news you got yesterday, right? Doesn't that kind of help? That's not even
It,
into the chart, into
that's
the data
true.
yet.
That's true. It does help. What I'm waiting to see is if that's a signal of something more, right? In other words, they got more deliveries, that's great, but does that mean the company is really on a good financial track right now? Does that mean they're really improving their bottom line? Because remember, we have a lot of uncertainty out there as far as demand for airlines. I mean, we know that a lot of people are booking flights, but at the same time, demand to buy new jets, with all the stuff going on in the world, economy slowing down, et cetera, is not really the best environment to expect large demand for orders of airplanes, to say the least. So that's what I'm just saying. Like there would have
That
to be
makes sense.
something
That makes a lot of
more going on. So looking at the fundamental picture, I can say this. And this is the part I want to point out. Based upon the numbers, these are the earnings numbers for Boeing. So for folks who are not familiar with this, each of these rectangles, these histograms, they represent the earnings. The rectangle in the background represents the expected earnings result. If it's pointing down in red, or brownish color. That means it's a negative expected outcome. The line in the middle represents the actual. So where I'm highlighting here, it's kind of hard to see, guys, but I'll just read it to you. For that earnings for June 2020 report for reporting for the June 2020 quarter, which is Q2, we had an estimate of a loss of $2.93 a share, but the actual was $4.79 loss. So it's greater of a loss than expected. But what we want to look at is as we go forwards in time, we've had some really bad surprises. Like in other words, this is one of the few stocks that I've seen over the years that can have these really massive surprises on earnings. But the last few, they look like they're improving. We're gradually moving up towards positive territory, but we're not quite there yet. If I look at the metrics, sales growth is not up; it's down. Um, Net income is actually, well, it looks like it might have slightly improved, from the previous reading, but not really seeing great numbers over here, and that's why it's lukewarm on the overall rating. But the analysts do think that this stock is going to be worth a lot more. So still, and these are all recent ratings. So basically, the average is about 224. A lot of companies actually changed their estimates yesterday. Most of them actually downgraded the stock slightly, but not a lot, and they did say they're still bullish on it. So if you want to buy Boeing, I would say right now, I agree with you. This is probably a good time if you're an investor with a long-term perspective. This probably is a fair price, is all I'm saying. 150 a share is the estimated lowest price target. We're actually trading below it. So that's one of the things that makes me worried because if it's trading below the lowest estimate, that begs the question, so what's going on here? Why is the market not agreeing that this stock is worth more? So if you really like Boeing, if you're willing to invest into it, I would say probably you could get this now and at probably one of the better prices you're going to find. If it does keep trending up, then obviously we have some momentum there, and then perhaps it can go up to eventually get into one of these targets. So looks like a decent buy if you have a longer term perspective. But in the short term, I would say this one's going to be a little iffy. Even after that good news yesterday, stock is still down, but so is the rest of the market. So I guess that's not that big of a deal.
Yeah, so if there's a little bit of a pullback, 140, 135, 130, 125, might have some opportunity there. But
Yep.
One last thing before we go on. What's the institutional money looking like? Because I know we usually like to touch on that to help
True.
gauge what's happening.
Money flow currently is negative, so we have a net more selling than buying, even including yesterday. Um, Ownership is up 1.21% for institutions. This is a stock that's 50.6% institutionally owned, which means that it's not Boeing is not a crowd favorite for the investment world. 50% is a good number, but a lot of stocks have the same number, so that's not really that impressive. If it was like 80%, 70% institutionally owned, I would say, wow, this probably is a good stock. But that's not what we're seeing. It's in three fewer top tens, 91 more sellers, 113 fewer buyers, but the overall amount of shares owned by institutions is still up 1.21%. I don't want to count insiders because they're only 0.67% of the company, unless they were all selling at once. That might be a sign that something's wrong, but other than that, doesn't look like that's that big of a deal. So not seeing any strong numbers, looks kind of mediocre to me. And the only thing that I would definitely point out about Boeing is that um, unless we start to see some more buying coming in, obviously the stock can't go up. We need those buyers. We're not seeing them right now. But for those of you who want to time the entry, which I would recommend, wait for those buyers to show up. Here's the money flow goes positive. That's where you want to start to jump, because this will go positive first, and then after that, we'll see who's the buyer because they have to report it after they've done it, but they don't report it the same day. It'll be usually a few days before you know what institutions were buying. So if we see the money flow strongly go positive, that's where I would strike. In the meantime, all we're seeing right now on the chart is we are seeing move up. But as I mentioned, I'm not sure if this is going to convert into a longer term trend. So for now, I would be very cautious about parking money unless you really want to hold for a long time.
All right. So lukewarm, I think, is the key word here for Boeing.
Right.
All right. So for anyone watching or listening for the first time, if you're not familiar with the software or the charts that Mike is going over, this is Madison Trading House, Madison Trading Software, analytical tools, and a slew of other features in here that really just enhance your trading capabilities, your ability to read data and make decisions on investments. We've got a 7-day free trial for anyone, so I'm going to go ahead and put the link in the chat if anybody wants to go ahead and check that out. And what we like to do in this section is just go over some names like we just did with Boeing. So if anyone has a stock or a ticker that they want some analysis on, feel free to drop it into the chat, leave a DM, whatnot. We'll see if we can get it into the episode. But moving on to the next name, and I'm curious because last week we did kind of the EV review where we talked about Rivian and Lucid, and we didn't really mention this name, but does this name Neo Motors, do they fall into the same category? Are they different? What are you seeing, and why are we talking about Neo today?
Yeah. So Neo is an EV manufacturer. They're Chinese, and they do have an established business. They sell vehicles, etc. And Neo has been. Well, let's just look at it from a longer term. Let's go through on the chart. So this is what Neo looked like going through 2020, 2019. I mean, this one was a flyer, really a nice mover. This was one of the best stocks that we identified back then. And a lot of stocks in the EV space looked very similar to that at the same time. So we had this big EV push, right? Then we get to early 2021, and basically everything just blows up, right? So we just come down, and then we get into this year, and things continue to slide. So I could basically tell you that Neo is definitely a hot item as far as a stock. And right now, we're actually seeing what appears to be the potential rally to the upside. Now, it is in the EV space, so a lot of what's going on these days is EV related. But Neo, sorry, that's I look at my notes here. One moment here. Where are you?
So they're the Chinese Tesla.
Basically. Um, so with Neo, you have one second here. With Neo, you don't have any serious news, to be honest. But all I can say is that I do think that we're getting another wave of interest in EVs, and the reason being, of course, with Rivian, um, and uh, what's the other one? Lucid. Both, I mean, Rivian was the driver, but then Lucid is also a successful company too in the U.S. for EV manufacturers. So I do think we're getting more of a drive into EVs right now. So we should see more upside potential in my expectation. A lot of these stocks are really beaten down. So I would say that valuation wise, this does not look so good. It really doesn't. So I don't see this as a safe investment because until one of the things that we got to be careful about when you're investing into Chinese stocks that are listed in the US is that reporting requirements are not as strict, so companies can more, and they do. They fudge their numbers a lot for Chinese companies, and therefore, when the basic bottom line is this: the Chinese government, as far as they're concerned, the only thing they want is more investment from foreigners, foreign countries into their equities. So whatever makes them more attractive, they're fine with, to be honest. So, or be candid. So basically, with Neo, we already had demand before for the stock. I do think that based upon everything that's been going on recently, the stock probably is due for a run. Now, I don't think it's going to repeat this. I really don't. And also, if you look at these earnings, notice that they're all like not available, and that's kind of what going on here. We didn't have any estimates. We had the actual results, but no estimates. And again, it's just because, well, no one really knows what's going on over there. So it's hard to make an estimate of something where you're not clear about what's going on. So I do think that this is probably going to be a mover, but it's more for technical reasons than anything else. And that's what I want to go over right now, which is how to use trend analysis tools to help us find entries. Now, we already know fundamentally that we can look at these boxes and know the fundamentals. We can know the valuation. We can know what insiders are doing. We can know all those things, right? So right now, we don't see a massive amount of buying. Money flow is actually more negative than positive. Institutional ownership is down a bit. So we're not seeing anything impressive here. Valuation, as I mentioned, not so good. The chart, not so impressive as far as short term. It is up, but it's been flat for quite a while. But when I look at this from a technical basis, this is what I see. So we have on this chart these trend lines. I want to point out what these are so you guys understand what they're useful for. These two trend lines, they look like moving averages, but they're not normal moving averages. These are proprietary to Madison Trading House. What we did is we created a set of moving averages that look at buying activity. We look at trading activity each day. We identify whether it's more buying or selling. And we also look at what prices. So if you have a $10 range in a stock in a day, for example, we look at where most of the trades took place. Did they take place towards the top of the range, the bottom of the range, in the middle? And when we take all that information and plug it into our formula, what the formula is designed to do is basically tell us if things look bullish or bearish, and the blue line at the bottom is the longer term view. It's just basically saying that on average, we're getting more bullish looking trading activity than bearish. So it's not necessarily that the stock is going up, although the stock will go up because of the bullish activity. The line can still be blue even if the stock is flat. And that's actually one of the interesting things about it, because when that bullish activity is picking up momentum, usually the stock doesn't move first. It's still going to be trading around in a neutral range. And then suddenly you start to see a trend when the buying finally overtakes the selling pressure. Sorry. So basically, with that in mind, when we look at when we look at this chart, we can clearly see that the bias was bullish at that time. Now, of course, again, we can see the stocks going up, so we don't need a tool to tell us that part. But this just is a way to for us to confirm the degree of which the strength is there. The top line actually turns blue when the buying pressure gets really aggressive. It's going to be gray when the buying pressure is so aggressive, and it'll turn red if the selling pressure becomes aggressive. So, like that, right here is red because the selling pressure is very aggressive. Now, you might be wondering, well, what if it just looks like all it's doing is turning gray because the price is going down? Well, that's not true. So look over here. We have the price clearly going down for the stock, but this line is gray. And what that basically means is that there's not an extremely strong selling pressure at that time. Even though the stock's going down, it's more like drifting down. It's more like it's deflating. It's not getting really pressed lower. You're just running out of buyers basically in that situation. You lost your aggressive buyers, you have slightly more sellers, and it comes down. So gray line just means things are cooling off. So when it's gray, you can very easily drift in either direction. But when you turn blue, you usually get these really fast, rapid moves. So what we like to do is wait for both of these lines to turn blue to initiate trades, assuming that we have a good reason to be in the stock in the first place. Now, for Neo, fundamentally, as I mentioned, there's not much going on here that I can say is really solid. The fundamentals themselves are neutral; they're not good or bad. So, if I look at the stats, the expected targets are definitely above where we are now. The lowest target is 2580, the highest is 8, the middle is 3467. So we know we've got some interest in buying the stock because analysts do see it positively. If we look at the numbers, like I said, have complete numbers on Neo because they don't report as much. It's just the nature of the way these stocks, the Chinese government handles things. So our data is going to be very patchy on this, but the analyst data is going to be clear, and they definitely have upside expectations for the company. So if that's the case, then if we're getting into this stock now when it's starting to trend, there's a good chance that we might see some follow through buying. So I would say for this one, this is more of a swing trade and it's mostly a technical based trade. What I would look for is exactly what's happening now. We have a trend that's clearly on the up direction. We have our pullback here. And basically all we're going to do is wait for this to bounce and start to go back up again. Moment that happens, that's when we buy. So this is the basic technical setup that we use across the board when we get to stocks that we're going to hold for some time. We just wait for a trend to emerge first, look for a little pullback, and then basically, I mean, kind of like this one did here, you pull back first, and you start to go up, and as soon as that starts to go up there, that's your buy signal. Now, just like anything, it's not perfect. It's not going to work every single time. But what you guys will find is that when you're using the software, once you find a stock that's got some good drivers behind it, like for example, Neo, they had some really good earnings momentum going into it right here. And then again here. So we had out of the last three, two of them came out positive surprises. One of them came out negative, but not nearly as negative as the positive outcomes came. So in other words, this positive outcome, they were improved by about 12%, 12 cents better than what was expected. This one was 3 cents worse than what was expected. So, in short, their surprises on the positive side were better than their surprises on the negative side. Plus, we had very clear buying interest from places like ARK Fund, Kathy Woods and her ETF. You had some big ETF buyers getting into this. You had some technology focused funds getting into it. So you had a lot of institutional buying too. And basically, that just the right setup for a good time to get in. So most of the institutional buying, as you can see here in green, that's the institutional activity metric. You can see that they were mostly buying from here to there, right? And then after that, there was some selling, and then they start to pick it up again over here. So in short, if you were looking at this from that perspective, sorry, if you're looking at that from the perspective of the Madison platform and we're seeing where the buying is coming in, we had solid buying in Neo from here all the way to right there, right when it topped out. And then before that, we had solid buying. Sorry, one second here. Before we had solid buying, uh, before that from here to there, right? So those two periods had the best buying. We did have some selling pressure in between, but nevertheless, with the technical setup, with the fundamentals being fairly good at the time, it looked like a good buy, so we took it, and that was one of the best trades we did last in 2020. So, in short, guys, if you get a nice setup like this on a stock that has some reason to go somewhere, do it. Right now, we don't have quite as impressive of a setup, but I'm going to watch it. And if I do see that rebound action that we're looking for, that's when I believe it's time to take a stab at it. And hopefully, there's no negative news out there that accompanies that would dissuade us from doing it. But as it stands right now, it looks like this might be setting up fairly soon for a run.
Yeah, and this is just one of this charting feature is just one of a slew of different ways to go about finding signals and trades and opportunities. On top of the scanners, you got the institutional buying, you've got the earnings reports, and there's just so much in here that I highly recommend anybody watching or listening for the first time to grab that link in the chat, download or log into the software for yourself, play around, ask the team questions, and get as much information as you can to help you make investment decisions. And so that's one of the reasons that we have the show, so that we can get to educate people on the different uses of the platform. So, Mike, congratulations on that Neo trade. That looked good. I think if anyone wants to go back and watch some of the EV content we talked about last week, there might be some similarities there to the Neo setup, with specifically to the Rivian, because they're such a fresh company. But
Yep.
we don't need to go into that now, just because we just did that last episode. Um,
Right.
but anyone watching, listening for the first time, grab that link, get a copy of the software, start using it for yourself, because it really does have a lot of amazing features. But with that, we are running short on time here on the episode. Mike, heading into the rest of the week, I believe the term that a lot of people are using is the summer doldrums. Anything we should be keeping an eye on other than what we mentioned with retail sales?
No, that's it. I mean, I'm just going to focus on my attention on that, and of course, just keep an eye on changes that may occur, and obviously with China, look, keep track of anything in Europe as far as with the war, with Russia and Ukraine, and basically just kind of keep track of what changes are going on in those places. Those are going to be some of the bigger drivers, and then just monitor any updates from the Fed. We will have a Fed member speaking on Friday. I believe it's going to be Bullard that's speaking. So we do want to check out what they're what's said there in that meeting, and to see if that confirms what everyone's expecting, that we're going to get that 75 point basics point hike. What we really should be listening for is if they're going to try to hike even more than that. That's what I'm really listening to hear. Like if they want to go farther. So we'll see.
All right, yeah, and I'm looking at the markets now, and everything. We've almost went positive on the day, so I'm
Yep.
very surprised to see that on 9.1 CPI inflation. But hey, that's the nature of the market. You never know what it's gonna do any day.
Absolutely, you don't. That's true.
All right. Thank you for your time, Mike. Thank you, everybody, for tuning in. If you enjoyed the broadcast, hit that follow, hit that like, hit that subscribe button. If you have any questions, reach out to the team. They're always available to help answer anything and get you going on your investment journey. With that, we'll catch everybody next week. Thanks for tuning in. Appreciate the time. Mike, thank you once again. All right,
All right,
everyone.
folks. Take
See
care.
you later.